Welcome everyone to the CFO Swinger Watch Report technical analysis video for the trading week of June 16th through 20th. Now, the following research in each and every single weekly report is a chance at applying your own learn and earn trading system. On top of that, the combination of the weekly report and this technical analysis video will give you a complete top-down analysis on the overall markets and individual trade ideas. Overall, every report will be giving you full guidance in the upcoming trading week, allowing you to cut down on the extensive research time that is usually needed to achieve a very successful trading week. So make sure to join us if that is something that truly aligns to your trading goals. Take a look down below at the description box to start that trading journey with us. With that, let's get into the markets. So first of all, as a quick reminder here, we do have a short trading week due to Juneteenth on Thursday. So make sure you guys remember that, and most likely we will be getting lower volume as we head into the last half of this trading week. Now let's go straight into the technical analysis of the markets, because we have something very interesting potentially happening that could potentially give us a reversal to the downside. All right. So first of all, last Friday's candlestick. Right. We're seeing a lot of talk about last Friday's candlestick across multiple social media platforms. Now, realistically speaking, this isn't too startling of a candlestick. It's nothing to be completely surprised about. It's not something to be completely feared upon by this appearance of this daily candlestick. Rather, it's a pretty solid candlestick where we're still upholding a short-term uptrend, right? Because first of all, we are still right near the daily 10 SMA. Yes, we did close a little bit below it, but still within the vicinity of the daily 10 SMA. And we're still upholding the daily 21 SMA, this light blue line. Now, I have mentioned this daily 21 SMA multiple times last week. Now, I was also personally a little bit surprised that we did not retest the daily 21 SMA last Friday due to the fact that we had such weak price action on futures markets on Thursday night all the way up into Friday morning. So the fact that we did not see a retest of the daily 21 SMA last Friday was very interesting, because that means that sellers were not really active, but at the same time, buyers were not willing to really try to bid the price higher to at least stay over $600. All right, because again, we did close 3 points below that. And this to me just simply states that both sides are not yet willing to truly break the trend back to the upside or to the downside. But at the same time, we still haven't really lost the uptrend, right? We just lost the daily 10 SMA. But if we do lose the daily 21 SMA, that will be an official loss of the uptrend that we currently have. But then again, we're kind of in this gray area where both the bulls and the bears are not really doing too much, right? So now I do want to bring up this technical indicator, which I really don't do a lot, but there's something interesting developing, right? And that could potentially give us a sign that there is a trend reversal on the way. So the RSI, or the relative strength indicator, could be showing us a potential bearish divergence, right? So first of all, we have this lower high trend that is forming on the RSI, while we're seeing higher highs and higher lows on the overall price action. But there's a caveat to this, right? You shouldn't just be saying, oh my God, there is a bearish divergence, I should just go all in to short the markets, because this RSI bearish divergence is not yet confirmed. Right now, you might be asking me, Andrew, what does that mean, right? Why is it not confirmed? Well, first of all, we have not made a lower low on the RSI. And which low are we comparing that lower low to? Well, this specific low on the RSI. And that was also the previous pivot low point on the overall market. All right, so Friday on May 23rd, on this daily candlestick, we came back down to retest the 200 SMA, which again, I gave you guys that analysis, which was perfect and absolutely on the spot. And we decided to move away from the daily 200 SMA, which is very reasonable since there is a lot of long-term support and buyers willing to defend this SMA, right? And so we have not yet come back down on the RSI specifically, not the price action wise, right, to retest this low, or at the very least break below this low, giving us a new lower low. So again, this lower high is not yet confirmed, but it is still a warning to all of us that there could be a potential trend reversal to the downside if we do see more selling volume coming from the shorts. Now, obviously, last Friday, we did get a lot of volume, but again, the overall price action was still relatively stable, right? And we're still in a good uptrend, although we did lose the daily 10 SMA, right? So there are small indications and small warning signs like this potentially developing RSI divergence on the overall markets, right? So again, for this week, just look out for a potential retest of the daily 21 SMA, which will be around 593 to 594, which is the same range that I gave you guys last week. And again, the reason being is that, well, the daily 21 SMA just closed last Friday at $593.22. All right. Now, for anyone who is willing to go short at these prices, right, especially if we do still hang around the daily 10 and daily 21 SMAs and are looking for a potential target, well, I would say the maximum move that we can go down to will be around 585. So yet again, we're still playing with our initial three areas here, or levels that we've pointed out back in late February, right? So 600, 585, and 574.50. So again, if you guys have this short mindset for the short to mid-term or even long-term, well, these levels are for you, right? 600, 585, and 574.50. And they have been playing out very, very well for all of this year so far. All right, so with that in mind, I want to take a look at the next index, IWM, or the Russell 2000 ETF. So IWM, and I want to keep up the RSI here so that I can give you guys a very quick summary of what I'm saying, right, is looking very good for a potential run up to the upside because, first of all, we have seasonal trends that are favoring small caps and mid caps. And so IWM is a very popular choice to get exposed to these small caps. Now, this specific asset class is looking very interesting because it did have a very nice and very quick move to the upside and a very quick move to the downside. And in fact, it had a pretty much a similar amount of days going to the upside and going to the downside, right? Now, we did see a very nice retest and a very nice rejection at the daily 200 SMA, which just simply states that we're not yet ready to have a very big breakout over the daily 200 SMA. Now, what's also interesting about this is that as we've made a higher high on the overall price action, so again, if you just take a look at this general area, oops, let me make sure I bring out my brush, okay? So if you just take a look at this general area and then take a look at last week's high, right? We obviously made a higher high. And at the same time, if you take a look down below on the RSI, simultaneously, we also have seen the RSI making a similar, right, higher high trend, right? This is completely different to the descending trend that we saw on the RSI, and we rather have an ascending trend for the RSI. So we're seeing similar action on the RSI technical indicator and on the overall price action. Now, as long as we do not make a lower low on the RSI compared to, well, this previous low point here, and again, that was the same day as well, right? May 23rd on Friday, we should be set to move up higher and potentially continue to pivot back up higher, especially since IWM was able to retest its daily 21 SMA, unlike the S&P 500 ETF or SPY. All right, so make sure you guys keep this small cap index on your watch list this week. All right, so with that being said, let's take a look at this week's official swing trade idea. So it's Google, right? So Google, first of all, the reason why I chose this last week to put in the MM list, the momentum mentions list, is that, well, it just looks really good, right? And again, if you guys didn't see this name last week, well, that's because the report was not sent out due to some familiar matters, right? And if you guys are looking to read what I put for Google and the analysis that I put out for Google, make sure you guys check out the private CFO Discord channel, specifically the CFO Trade Ideas channel, right? And so Google was supposed to be a part of the MM list in the official report last week, but again, I had some very sad event occurring, but overall, Google was supposed to be in the MM list. All right, so now for this week, it has officially gone on to the trade idea for this week, and there is a very good reason to be looking at this ticker, because overall, Google has been showing some exceptional strength. Now you might be telling me and asking me and wondering why I chose Google for this, because other Magnificent 7 stocks are looking a lot better, and you're right. However, Google has been a huge laggard compared to its peers in the Magnificent 7 stock group. And Google is just coming out of a new uptrend. And why do I think it's a new uptrend? Well, first of all, the price is now sitting above its daily 200 SMA, right? And unlike, for example, IWM, right, as you just saw here, it's been able to stick around, consolidate, and stay above the daily 200 SMA for the past few weeks. And that is a complete trend change and a trend reversal to the upside. So you want to make sure you're keeping an eye out on this name. And first of all, last week's analysis was absolutely on point, because there was a very good entry point over 174, which is obviously above this descending resistance trendline that I also pointed out. And last Friday, we continued to really respect this descending resistance trendline to a T. And we ended up closing above it after opening up and retesting on the daily 10 SMA, or this red line. Now, obviously, since the markets and big liquid names and mega cap names like Google follow each other to a T, okay, if you do see continued weakness in the overall markets, Google will most definitely move down as well. But the maximum point of where I want Google to move down to is at 170, which is the reason why I gave you guys a bounce entry at 170.10 last week. All right, and again, if you guys haven't noticed, I've given you guys the same entry points, because these two entry points still very much matter, and you guys should be looking at these two levels, 170 and 174. So again, if we do see a move down in the overall markets and Google goes down with it, which will most likely will, we can see the price coming back down and retesting this 170 level. But at the same time, you want to see the buyers absolutely defending this level. So I guess you guys can say that 170 is the new line in the sand level, because again, in the past, we saw 154 being the line in the sand level, and it was a perfect line in the sand level, because again, it was a very magnetic level, as we saw the price really just coming back to this 154 multiple times as it tried to base out here from this massive downtrend that it saw from late February all the way up into early April. All right, so 170 should be your new line in the sand level, and at the same time, it's also where the daily 21 SMA is currently residing in, right? Obviously, it's a little bit over 170, but I really do want to see a very good reaction right off the bat if we do see a retest of this daily 21 SMA early this trading week. Now, obviously, right, if we do decide to come back down, we will have to break below the daily 10 and the daily 200 SMA in order for the daily 21 SMA retest to occur. So I personally would not want the prices to come back down and break below the daily 10 and the daily 200 SMA just solely for the purpose of retesting the daily 21 SMA. So like I've said in the report this week, I would really like the prices to just consolidate and move sideways above the daily 200 SMA and ideally the daily 10 SMA to allow the daily 21 SMA to continue to curl up higher and reach the price itself rather than the price moving down to come meet the daily 21 SMA. Does that make sense? I hope it does. Right? So again, ideally, we just want to see, maybe a couple of inside days compared to the huge range that we had from last Friday, and just simple, tight trading days for the next couple of trading days into this new trading week, and a possible breakout back to the upside and potentially taking out the highs that we saw last week. And again, the high that we saw last week was printed at 181.11. Okay, and last but not least, make sure you guys take a look at the full 3-point game plan for Google and also the specific option contracts that you can use to execute on this specific swing trade idea. Alright, so that is it for this video. If this technical analysis video was insightful and most importantly applicable, make sure you hit that like button down below. And if you are new here and you aren't subscribed to the channel, make sure you hit that subscribe button as well. But also, if you're watching this video when it just became public and you would like to watch this video a day earlier when it's private, the only thing you need to do is become one of the many readers of the CFO Swinger Watch Report, which will automatically give you access to the private CFO Discord community where you can expedite and further your learning and trading. Alright, good luck, and I'll see you all tomorrow morning.